NASDAQ 100, S&P Tech, highest level in more than a year. What do you make of it?
Well, on the surface, it sounds great. It sounds encouraging. It sounds like a strong market. You always have to think about what's happening under the surface, though. And when you think about the fact that more than half of the S&P is still trading below their 52-week highs, you look at the fact that the equal weight S&P underperforming the market cap weight S&P, there's not a lot of durability or support outside of those big names. And this is an environment where we've got yields up again. We've got a Fed that continues to send sort of hawkish messages and a market that's priced in fewer rate cuts than it did about a month and a half ago. This is not really a friendly environment for multiple expansion. So I would be cautious, especially about these names that have had such a big run into the beginning of the year.
All right. Perfect segue to Joe, because being cautious. Loop downgrades Apple, okay? It's rare that Apple gets a downgrade. They don't even, I mean, the stock's within $10 of a new high. They don't even really call it a valuation downgrade. They're worried about the company missing their revenue number for the current quarter. So it's more fundamental reasons than just simply the stock's had a huge run off of its bottom. It's up 40% off its 52-week low, and it's only 5% off of its all-time high. What do you make of this call?
I think that the possibility that their revenue contracts this quarter, I think that probability is pretty good, probably pretty high. I think the consumer is beginning to be more cost conscious, and I think that will be reflective of all consumer discretionary, all consumer staples, and certainly it applies to Apple. So I would not be surprised at all to see a revenue decline from Apple in the coming quarter. Does that mean that the price has to have a significant subsequent decline? I'm not necessarily sure that's the case. And I think a lot of what's going on right now with Apple and mega cap technology and consumer discretionary and other names is nothing more than rebuilding of positions and a lot of non-discretionary, rules-based, quantitative buying that's coming into the market. And guess what? You could dismiss that. You could say that that's not logical. You could say that the quant funds coming in, they don't understand the overall environment, but they are massive. And they are the overwhelming majority of the fund flows into the market right now, and Apple is one of the beneficiaries.
All right. Jason Snipe, does this call at this particular time give you pause on how you should be thinking about and how our viewers should be thinking about mega cap tech, particularly the ones that have had the kinds of run that Apple has had?
Yeah, so for me, I think a lot of the rage has been around AI and safe haven and typical, in my opinion, late stage behavior where a lot of the mega cap tech names have run quite a bit. I agree with Joe. I wouldn't be surprised by somewhat of a slowdown heading into this quarter. I mean, these are the slower quarters for Apple typically as they look to the refresh cycle going into the end of the year. But the stock is up 34%. It's trading at 29 times forward. So it's gotten stretched, as Liz was talking about earlier. A lot of the tech names have. But for me, I think you could potentially still see some short-term run over the next few weeks as we work out the debt ceiling issue and going into the next season of earnings starting in July.
Weiss, these runs in these stocks give you pause. I mean, because you've started to buy into some of them more recently, so they can't give you that much pause because you're buying some of them as they're already up a fairly substantial amount. In terms of like Microsoft, you bought a little last week. If you were worried about overall valuations, you wouldn't be making a move like that, would you?
No, it would be, but that's why I didn't buy a full position in it. Look, the Apple question is sort of like a non-question. Their revenue growth has been flat, basically, for the last year and a half, 2 years. So if they miss revenue growth, it just hasn't mattered for the stock at all, because maybe it trades down for a half a second, then people come in and buy it, and you're really buying the market. So I'm not concerned about Apple. Am I concerned, to Jason's point, Liz's point, that these are sort of blow-off tops? Sure. But as I look at Microsoft, the reason I bought it is because I do think that there's a change in important, maybe the majority of investors at this point, that are valuation agnostic, that are buying the vision for the long, long term. And that's why, uniquely, you're seeing these mega cap technology stocks working, because that's the language they speak, that's what they want to be in, and they have the tailwinds with AI and balance sheet.